Hello, and welcome to the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 26th of March, 2015. This will be our last preview for the week, as we don't typically do previews for Friday. Most of the week has played out by the time Thursday wraps up. Shouldn't be too much new to discuss technically until we get through the weekend. So here's a look at the ES, that's the S&P 500 E-mini futures contract. This is the front month daily chart, and you can see we sold off sharply on Wednesday. It was a great trading day for us, and a lot of really nice winners, almost all on the short side, of course, as the market was heading lower. Here's a look at the S&P cash index, down 30 after running into that green static trend line the other day. Here's the NDX 100, down 101 points. Big down day for the NDX 100. Still looking at that red line potentially as a target. That's the static trend line that's currently in play. SOX took a wallop, down 33 points. That's big for the SOX index. It's only a $700 index. It's about 5% on the index for the day, hitting new lows for the month after being at new highs yesterday. And the biotech's down 154. Guys, I keep pointing this out. The market has been struggling. If we go back and take a look at the S&P and put it on a monthly chart, the market has been struggling against this risk line here from a 13 sell signal on the monthly time frame. Now, I said in the weekend reports the last couple of weeks, the last time we got a 13 sell signal on the broad market was back in 1999. It took a little while, obviously, to roll over, and we actually got above the risk line temporarily on that one. But here, we have stalled out exactly. We closed the month of February at the risk line. We tried to get above it and couldn't. The body of March's candle is now well under the risk line. And my feeling has been that part of the volume problem is that the market is just out of gas and having a hard time. I think the volume is if we head lower. And we certainly saw that today. Let's go back and look at the daily charts and take a look at the volume number. You know, poor volume on Monday and Tuesday, 1.45, 1.49 billion shares. Market couldn't get going. And then here we go today. We start to roll to the downside. Over 2 billion shares traded. The best volume day of the year, essentially, minus the triple expiration on Friday, which is all false volume. So the volume's on the downside plays right now. The market's, I believe, just extended and exhausted and having a hard time trading to the upside. And it says a lot about where we should be heading, obviously. Lower is the short version of that. Here's a look at crude oil. Closed the day at 49.21. And back up a little bit from where it's been. And also gold up 4.4. All right, let's take a look at the 5-minute futures chart so we can see what the day looked like. This is the type of trading day we like. Remember, we don't like big gap days. Gap and go days where the potential is kind of lost in the opening gap. That was not today. Today was a day where we actually gapped up a couple of points, filled that very quickly, traded around that area. Volume was solid. We knew it was solid early on. We discussed it. It gave us more opportunities throughout the trading day, and it was a big down day. That's a good trading day for traders, not these gap sessions, but the solid movement. Anytime you're heading down in the market, you'd like to see a gap up and then roll, not a gap down that covers half of the total range for the day. All right, that's the ES. Here's a look at the NASDAQ side, and also down heavily. Futures are showing flat right now post-market, so none of the post-market news, if there was any, had any impact. And we're just looking at, should be a flat opening so far based on what we're seeing for tomorrow. Economic data-wise for tomorrow, we have initial and continuing jobless claims. Those are the weekly numbers. And the natty gas number an hour into the stock market. None of those are too big of a deal. And then on Friday, the third look at GDP for the fourth quarter. That's not a big deal. It's a revised number for the most part. And then Michigan sentiment. So that's 30 minutes in. That's it. That'll wrap up the week. And then don't forget Monday and Tuesday, last 2 days of the quarter. So we've got quarter ending window dressing to be affected by. But today was certainly the open day where we could get something done here. Remember, Monday we kind of expected to be late because it's the first day of a new quarterly options cycle. Tuesday was a little late still, and then here it was Wednesday. Maybe Thursday, get some good opportunities. Friday, slow down a bit because you're heading into the weekend, and then maybe Monday, Tuesday, slow again to end the quarter. We'll be in the lab calling it as usual, helping you make money. Charts brought to you by eSignal. Have a great trading session.